This undictated special podcast is brought to you by Futuregrowth Asset Management. Andrew Canter, the Chief Investment Officer at Futuregrowth, joins us now. And the big news, Andrew, unquestionably in the past week, in fact, it's not quite a week ago, that Leon Kirkinis left Abil with immediate effect. And, of course, it's been all fall down since then.
Hi, Alec. Indeed, it's been a rather tumultuous week. Although I must say, given the events of the last couple of years with Abil, it wasn't altogether as sudden as it appears to have been.
Yeah, I've just had a chat with Jean-Pierre Fuster from 361. They made 100 million rand in shorting the equities, but it seems as though there was a completely different story on the bonds.
Well, it's hard to short bonds in the first case. Normally one wouldn't do that. And they made 100 million by being short the equity, not being long. I think the evolution of the story from the troubles of the last couple of years with the micro-lending industry, the personal unsecured loans, and the bad debts that were coming through. Abil did do a rights issue with its shareholders last year, and it just turned out not to have been enough. The bad debts just kept coming. So as lenders, really, there was no way out. I mean, you're holding a 2-year bond, and you just can't get rid of a 2-year bond early. There was no secondary market, so you have to ride the bus all the way to the end of the line.
And what happened to the value of those bonds in the secondary market?
So there was no trade. It's very interesting. We watched it very closely because we were looking at it and wondering, if the market was really reflecting value. And at that point, a couple of weeks ago, we determined it wasn't. And there was just no trade. And that's not unusual in the corporate bond market in South Africa. Things get sort of socked away in portfolios and either forgotten about or just not transacted again.
But the international market did seem to have a fairly active secondary market.
Indeed, the Abil bonds that are listed offshore, particularly the Swiss bonds, were trading, although trading is probably a loose term. It was probably more like bids and offers. But they traded as low as sort of 40 or 45 cents on the rand, or sorry, on the euro. But it gives an indication of where the market was seeing value before the Reserve Bank stepped in. As you know, we've ended up with the Reserve Bank resolution is the senior lenders, that's instrument holders of money market instruments and bonds, but not depositors, are getting 90 cents on the rand. So for every, say, million rand of debt you held, you'll get 900,000 rand of new debt. Whereas the depositors, the man on the street who had a bank account, is going to get paid in full 100 cents on the rand, and he'll still have access to his accounts.
So the losers are those who bought shares in the stock market.
Absolutely. Although I must say, let's be clear. A bank is geared 10 times. There was an awful lot more debt out there than equity. So 10 cents on the rand on 50 billion of debt is a 5 billion rand loss. So by no means did the lenders get away scot-free. If the lenders were to some extent irresponsible for funding a bad business, indeed, we pay for it. Our investors have paid for it. It's come through in money market funds, income funds, pension funds. So it's a real loss. Obviously, the shareholders lost a lot more equity capital, but they should. The shareholders should always lose first and lose all before you start losing money as a senior lender.
And they pretty much have. There was a recent bond issue in the Swiss market. Was that issued at 100 cents in the rand?
Yes, it was, but it was at a higher yield. I can't remember the yield right now, but it was issued at a higher coupon, which would match it to 100 cents in the rand.
So,
100 cents in the euro. Stock currency here.
What would have pressed the price down so much to 40 to 45 cents in the euro? And now that the Reserve Bank's come in...
Keep in mind, up to the Reserve Bank stepping in over the weekend and coming up with a resolution, there was a lot of uncertainty. This business could have gone into a liquidation process with waiting for the man on the street to pay back his personal unsecured loan, so the lenders got paid back. You could have had continued people just refusing to pay their loans and further non-performing loans in the book. So you could have had much greater losses had the Reserve Bank not stepped in. I mean, that's one of the really interesting things. The word bailout comes up. As I said, the shareholders got wiped out. The subordinated debt in this business has been wiped out. I would assume the pref shareholders are also wiped out. Senior lenders have lost money. So there is no bailout. The Reserve Bank actually stepped in to stop the losses. And in a suitable way. They used taxpayer money, but in a very safe and suitable way to control what could have been an uncontrolled situation. I think they've acted very well.
That seems to be the consensus.
Well, I think everybody's facing the weekend with some trepidation. Everybody knew that the walls were falling down, and we knew the Reserve Bank had been looking at it for quite a long time. And it looked like there was a consensus of factors between the banking industry that doesn't like to see a bank failure, the Reserve Bank that doesn't like to see a bank failure, and the lenders who don't really want to take over and run a failing bank. So it is probably a consensus. Then after the fact, everybody whinges and moans that they lost 10 cents on the rand. But all things considered, I think it's a pretty fair starting point.
10 cents on the rand, then clearly from what the market was suggesting on Friday, is a bargain.
Is a better outcome, that's right. And I must say, though, that it's being split into this good bank, which has the good performing assets of Abil, and a bad bank, which has the old non-performing loans. And I do believe the senior lenders will still have a residual claim to that bad bank. We've lost money. We should get paid first before any money goes back to the shareholders. No, sorry, I should say the Reserve Bank should get paid first, their capital back, then the senior lenders, and then if there's anything left, the subordinated lenders, pref holders, and shareholders. I don't expect there'll be any recovery for those lower tranches.
Andrew,
when I say we've lost 10 cents on the rand for a start, we are hoping there will be some ultimate residual recovery from the bad bank.
Do you have an exposure?
Sure, and it's not unusual. The whole industry did. We did foresee the problems. You may recall about a year ago, we came out publicly quite hostile to the industry about their practices. So we had been cutting exposures for 3 years, and basically in our funds we're well below 1% in almost all of our funds. So it's not a big loss, but any loss is a bad thing for a pension fund investor or a unit trust investor. So to that extent, it's difficult and embarrassing, but at least we were able to minimize it and manage it within the funds.
Well, you were very
as much as we could, keeping in mind there was no liquid market to sell these instruments.
Yeah, you were very aggressive at the time, and I recall those who'd gone short not only of Abil but particularly of Capitec were using what you said to tar the whole industry with the same brush. Are you feeling as concerned about Capitec?
So it's a really interesting phenomena and study to why in the same segment in the same market at roughly the same time has Capitec continued to perform well while Abil has fallen off a cliff. The things so the answer is no. I'm not as worried about Capitec. For the first answer, we're still talking about first generation management of Capitec. These are the guys that started that business. They still fully vested in it. They're still managing it and running it. They're conservative. Most importantly, their reserving policy was much more robust than Abil's. They weren't pretending they didn't have bad debts. They were reserving much more proactively and aggressively. Branch network taking deposits and getting payments of people's pay slips into the Capitec bank accounts to repay Capitec loans. It's much better than Abil relying on debit order payments. So it's a much better run organization. And while the share price come off a bit, it hasn't come off that much. So I don't think this is a systemic micro-lender sector collapse that we're going to see, and there are other micro-lenders. I think this was a combination of an industry that kind of is having a bad patch, which is entirely suitable under the circumstances, but very bad management. Abil really, despite all the warnings and discussions, just drove this airplane into the side of the mountain.
And yet the CEO had been there 23 years, and now it comes out that, well, some people were concerned that he always saw the glass half full. But if anyone knew the business, he must have.
Well, indeed, but one gets the sense that as over the years, their management has turned over and drifted away and gone to do other things. And I have to assume that over the last few years, Leon was not hands on the tiller. He was, kind of a non-executive CEO, if that's not an oxymoron of some sort. And there were some really terrible decisions made. Do you know, and one of the things that my team noted here just last week, we live in Claremont in Cape Town, just last week, Abil was having post office drops being done soliciting for deposits. And they've been doing that through SMSs and emails and advertising for the last few weeks. Even as they knew they were failing, they were soliciting deposits from the public. It's a really shocking behavior. Now, I mean, that's the worst kind of taking advantage of people on the lending side, and then when things go sour, take advantage of people on the borrowing side. It's the kind of thing that really leads you to deeply question the integrity of the people you're talking about.
Indeed. Do you think there's been all kinds of talk about criminal charges perhaps against the management, even implementing these very strict laws that there are in the Companies Act? Might we see something come from that, or is it, as per usual, the South Africans forgive and forget? Well,
I think we must be careful about the word "as per usual." I mean, if you're dealing with an outright fraud, and I don't think we are here. I want to be very clear. There's been no indications of fraud. there's mismanagement, arguably there's integrity questions, but I don't think there's been any allegations of out-and-out fraud or theft. And I think, businesses do fail, and one has to be cautious to throw around threats of criminal proceedings when what's really going on here is a civil matter. It's money's been lost by bad management. That's not something you generally get thrown in jail for. Your reputation gets rubbished. So I think we have to wait and see how the chips fall. But there's been enough auditors crawling all over this business for the last few years that I'd be surprised if an actual genuine fraud comes out of this.
What's likely to happen from here? I'm sure there are many bondholders who are sitting on the sidelines hoping that they can claw back some of the money.
Yeah, so it's interesting. There's a couple different approaches. One can say, well, hey, let's take our lumps, let's put it in the mark-to-markets, and let's move on in life, and let Abil do its cleanup job. Or you could all lawyer up and engage attorneys and start negotiating with the Reserve Bank. Frankly, I think the Reserve Bank has the upper hand. They have the legal and regulatory authority to do what they've done, and more, by the way, if they were to so choose. They've come with an answer. They've come with a comprehensive package. And sure, I think people will engage attorneys. I think they will try to improve their relative positions. I mean, as I say, the senior lenders will be looking to get residual claims out of the bad loan book, in addition to our 90 cents on their end, and I think that's reasonable. But I think this thing's pretty much over, and the dust has to settle.
Anything we can learn from it?
Oh, absolutely. There's skeins of things we can learn from it. We can use it as a study of new generation bank failures. In the old days, you expected the government to somehow bail it out so nobody lost money. This is new generation, man. Everybody's lost money. This is how it's going to be in the future. So that's a big and important lesson about how we invest in banks, because banks do fail. Hey, it's not that unusual. We think it's unusual because we kind of put it out of our mind. But on average, over time, a bank fails in South Africa every 18 to 24 months. It's scary, actually. So that's a big lesson, and it has to do with how you price when we make deposits at banks or buy bank bonds, how we price for that risk. We have to price for future haircuts, or what are called bail-ins, where we lose capital.
And the other issue here that hasn't really been touched on is there's some significant BEE shareholders who have been trading the stock on the Equity Express platform. I presume they're going to lose the lot as well.
Well, presumably, they're shareholders, and they took the risk. They could have. They hope to get rich, but that's the nature of shares. They can go up 10 times, but man, they can go to zero.
Andrew Canter is the Chief Investment Officer at Futuregrowth. This undictated special podcast was brought to you by Futuregrowth Asset